Good evening. This is Professor Higgins, and this is week 7 of our business organizations course here at Valencia. This week, we're going to be looking at my favorite business entity, and I'm sure it will be yours, the Limited Liability Company here in the state of Florida. I just really think there are so many great advantages to this business entity, and really not that many disadvantages. So I know you've been waiting all these weeks for this. This is the big reveal. So hang on, it's a wild ride. The limited liability company is not only my favorite business entity, but it's a business entity that can have 1,000 owners or one owner. It's a newer type of business entity here in the state of Florida. Although we were second in the United States to adopt it and to put it into our Florida statutes. It's state statute regulated. The very first state to adopt the idea of a limited liability company was Wyoming. And then Florida was the second state in 1982. So they haven't been around really that long, and there's not that much case law because they just haven't been around long enough for people to start fussing about them. But I think there will be, and I think that they're pretty well designed so that maybe there's not going to be a tremendous amount of case law. Maybe this will prevent a lot of business disputes. So let's take a look. It's a one-person entity governed by state statute, and the owners are actually called members. So let me give you the formal definition, and in fact, I'm going to give you a few definitions. So let's just hang on and take a look at these. The limited liability company, the definition is that it's an unincorporated, because it's not a corporation, it's an unincorporated association of one or more persons, and we know that persons can be natural persons like you and me, bleeding and breathing, or it can be an artificial person organized under the state law and managed by its members. And of course, here we are in the beautiful state of Florida, and so we are going to be regulated by Florida state law. Now, a member is any person, which can be an individual or an entity, having an equity interest in an LLC. Unless the articles of organization say otherwise, the members, remember members are owners, the members manage the LLC. So they all have decision-making control. Managers are agents of the LLC. Okay, that we kind of know, because if you're going to be managing and you're going to be making decisions on behalf of the business entity, then you are going to be an agent and the business entity is going to be the principal. All right, the management. Let's talk about that manager. A manager is the person who is responsible for the management of the LLC. The manager is elected by the other members if they desire. And usually there is a management agreement that spells out the rights and responsibilities of the manager. Now, the manager can be a member, or the manager can be someone that is hired from outside of the membership, outside of the LLC's ownership. And the operating agreement, which is much like a partnership agreement, which we've talked about earlier in this semester. The operating agreement is the agreement which governs the rights and obligations of the members and managers of the LLC. This is a cross between a partnership agreement and the corporate bylaws. So you're going to see that this limited liability company is sort of like if a limited liability company partnership married a corporation, they would have a baby and it would be an LLC. And so it has kind of the best parts of the partnership world and the best parts of the corporate world, and they have combined it into this limited liability company. the operating agreement is basically the law of the LLC. Let's see. Yeah. The capital account. Well, just like it sounds, it's where the capital is. The account in which the capital contributions, the money of the members, is valued and recorded. That's going to be your capital account. And just so you know, the LLC is the most popular business entity in the state of Florida. So we have more LLCs in Florida than we do corporations. And number 6, the last definition is articles of incorporation. The articles of incorporation is a document. This is what's used to form or to create the LLC. It is a document that is filed with the Secretary of State and officially forms the LLC. So to give you a little bit of background and history, I pulled up some stuff. An LLC is a relatively new entity, like I said. It was born in 1982, and we were the second state to adopt them. Now every state has adopted the LLC. But the interesting thing is, just like RUPA and ROLPA, there is the Revised Uniform Limited Liability Company Act, and that was put together by the same uniform commissioners of this commission. And what this does, what the let's see, I lost my train of thought. I get so excited about the stinking LLC. Okay, it's created in the states in order to create favorable business environments. The LLC combines the operational flexibility and the favorable tax treatment of a partnership with the limited liability feature, which you know I love, of the corporation, of corporate living. So it's really the best of both worlds. And Florida was a pioneer in the LLC world. It was only the second state to enact legislation recognizing the LLCs, which occurred in 1982. And it is it's Chapter 608. So Chapter 608.401 to .419, Florida statute, which is legislation modeled after the limited partnership law. Okay, the problem with the LLC is that the states, because only 17 of them have adopted the RULLC, only 17 of them have the rules. All of the other states that do have limited liability companies, their rules and regulations and laws vary greatly across the United States. So it's not easy when you're traversing, if you have an LLC and you're rocking and rolling in your own state, you're fine. But when you try to go out of the state, for 16 other states, we're fine too. How the way that we do it here in Florida is the way that they do it. But there's a lot of other states, of course, 30-something, that don't operate the way we do, and they're not regulated the same way. So when you go into those states, you're going to have to look up their rules and make sure that everything that you're doing as an LLC, if you want to be recognized as an LLC then you're going to have to follow that state's laws, of course. Okay. The characteristics of the LLC. Now we're getting into the really good stuff. The limited liability. Limited liability, each member has limited liability in the LLC. Every single owner has limited liability. Unless the articles or the operating agreement says otherwise, members of the LLC have no personal liability for the debts and obligations of the LLC, regardless of whether they're making any decisions, regardless of whether they're in management. If you are a member of an LLC, then you cannot be personally liable for anything that the LLC does. So if any of their creditors come after the LLC, and the LLC does not have enough money in its coffers or assets, then they can't, that creditor cannot come after any of the members. The second characteristic of an LLC, in addition to the limited liability, is the flexibility. The flexibility in management. Members can put anything they want into the operating agreement unless it violates state law. And unless otherwise provided, management is vested in the members in proportion to their contributions to the capital of the LLC, as adjusted occasionally to reflect any additional contributions or withdrawals of members. So whatever your initial contribution, if you have put in 60% of the capital, then you have 60% of the say and the control. Management may be vested in managers if the articles or operating agreement so allow. Managers owe a fiduciary duty to the membership. If an LLC is managed by several managers, then each manager will get an equal vote. And that is true unless, of course, the operating agreement says otherwise. All right, number 3. Characteristic, restricted transferability of interest. This is going to sound pretty familiar to you. Unless otherwise provided, a member's rights to profits and losses is assignable, right? Sounds familiar. If the assignee wants to participate in management, all of the other members must unanimously agree. If they want to be added as a new member, the majority in interest of the members must agree also. So, in order to transfer an interest, the only interest that the member can transfer is profits and losses. If the assignee, the person who's getting this, says, you know what, I wouldn't mind being involved in this. I would like to be not a partner, remember. If I'd like to be a member, I'd like to be part owner, then all of the other members must unanimously agree to that. All right, number 4. Fourth characteristic. There are much less formalities that an LLC has to abide by than, like, say, a corporation. Less formalities to organize than corporate and cheaper than a corporation or a limited partnership. So wait till you hear some of these fees. I've got them for you, of course, so you can get as excited as me. We'll study how to form corporations later, but just suffice it to say that there are formal organization requirements and reporting requirements for corporations that are very negligible when it comes to an LLC. I mean, what the LLC has to do is really negligible compared to what a corporation does. Plus, it's way cheaper to form an LLC. All right, and number 5, taxation. For tax purposes, an LLC may be taxed as a partnership so that there's no double taxation, or they can choose to be taxed as a corporation. So the taxation is basically the same as we've studied before. The rights and powers of the LLC. Section 608.403 in Florida statutes states that an LLC may be formed for any lawful purpose, except where another state statute prohibits formation of an LLC. But basically, an LLC can be started for anything. The only thing that I can think of that they cannot be formed for is if they want to do a nonprofit. But they can do any business as long as it is for profit. The Florida statute also says, unless otherwise provided, an LLC has the same powers as an individual to do all things necessary to carry out its business and affairs, including the following things. Number 1, it can sue people. It can be sued. Number 2, it can purchase, sell, or deal with real property or personal property. It can make contracts, guarantee, or incur liability. Number 4, it can lend money. It can invest money. Number 5, it can exercise all powers necessary to effect any or all purpose for which the company is organized. Okay. Exercise all powers necessary to effect any or all purposes for which the company is organized. All right, so basically they're saying whatever the LLC wants to do, as long as they do it legally, they are okayed to do it. They just have to run their business for profit. Now, the formation of the LLC, you have to, there's a checklist. Let's go through it. You have to have one or more person who's going to be the member or members. And remember that person can be any business entity or it can be a human being. Number 2, you have to select a name. This name has to be distinct from all other LLCs in the state of Florida. So you can't have 5 or 10 LLCs calling themselves Happy Time Boat Rentals LLC. You have to have your own. It must contain the words Limited Liability Company at the end of the title, or LLC, or the abbreviation L.C. Number 3, file the articles of organization. So you've got one person who's picked out a name, and they are going to now file the articles of incorporation with the Department of State, or sometimes I say the Secretary of State. You can do this electronically or by paper, but here's what you have to put in your articles of organization. Remember, this is to form the LLC. You have to have the name. You have to have the duration. If you are silent and you don't say anything about the duration, then it's going to be assumed that your LLC, you want it to go on in perpetuity or forever. Number 3, address of the principal place of business and the registered agent. 4, the rights of the members have to be stated. 5, the management, if it is to be managed by a partner, if it's to be managed by all the partners, if it's to be a hired partner. And F, you need to state the purpose. Now, in your purpose, I'm just going to give you a hint so that you don't have to come back and amend these articles of organization. Keep your purpose as broad as possible. There is a box that says any lawful purpose. So it is so broad that later you don't have to amend it if your purpose shifts. If you start changing it, once you get into business and you realize, oh, gosh, this part of the business is really taking off and this other part's not. And so why don't we do the second part of what we were doing, and then, hey, let's do the distribution also. So your whole thing may shift a little bit, and this way you do not have to amend your article of incorporation. Okay. And then the 4th thing for formation is to file an affidavit declaring the name and address of the registered agent and the acceptance by that registered agent. All right. Just like the partnership agreement, it's recommended, but it's not required. It's recommended that you draft an operating agreement so that you can prove that you are an LLC. If you have an operating agreement, that goes a long way, and for many very good reasons. By having the operating agreement, you can prove that you're an LLC because it's stated right here in your operating agreement. And there's something called piercing the veil, and we will really learn more about that in corporations. But it's just accept it for now that it's important. If you're going to operate as a certain type of business entity, you want to be able to prove that you are that type of entity. And this is something that just helps you do that if you draft an operating agreement. Okay. Once the articles of organization are filed, then you're a limited liability company. But every year you must file an annual report. And you must maintain a registered office and have a registered agent who can accept service. You must also maintain strict records as required in Florida statutes. And I give you your particular Florida statute in your notes. All right. The great thing about this is that it's relatively cheap. The filing fees, let me give you some numbers. The certified copy, you usually don't need one, is $30. But it's a good idea to include an extra copy and ask the Department of State to doc stamp for it and return it. Okay, the articles and affidavit are $125. Now remember the limited partnership? Remember how expensive that was? This is way cheaper than that. And then every year you're going to have to file an annual report. The annual report, in order to file it, is $138.75. Way cheaper than the limited partnership. So, I don't know. This is just, so far I haven't heard anything bad. I'm just loving the old limited liability company. It is recommended that you draft the operating agreement. There's an outstanding question of whether an LLC could be pierced. We talked about that. Okay, financial structure. The financial structure of an LLC resembles a partnership. The financing comes from its members, who are the owners, remember. The members' contributions can be monetary, they can be property, services, expertise, or notes. They must maintain a capital account, and you have to keep track of how much each member has contributed, because whatever their percentage is, remember, that's the percentage of profits that they're going to take at the end. According to Florida statutes, the profits and losses are allocated in the operating agreement. If the operating agreement is silent, then in proportion to each member's contribution. All right, sounds very much like a limited partnership here, doesn't it? Okay. It's very important to keep separate records of the LLC distinct from each member's personal finances. That's pretty standard on any of these business entities, but the more formal you get, then the more important it is. All right, the operations of an LLC. The records. Let's talk about the records of an LLC. An LLC must keep records at a registered office. You have to keep current and updated the names and addresses of all the members. You have to have your articles of organization. You have to have any powers of attorney that you might have, that the LLC might have, the tax and financial documents for the past 3 years, and the operating agreement. Members have to be able to have access to any of this, and as well as the members' attorneys. They have to have access to the books. All right. As far as meetings go, there are no required meetings, but if you want to have a meeting and err on the side of a meeting, you certainly can, and it's encouraged, but it is not mandatory. It's not required. For corporations now, it is. It's going to be when we study that. Number 3, salaries. An LLC can pay salaries to its members, but you have to see an accountant to make sure that you're within a range of what a good salary would be. And this you have to discuss this with an accountant, because if you go too low, it might be presumed that you're trying to avoid Social Security and Medicare tax. And if it's too high, then the court might presume that you are defrauding your creditors. So if you were going to defraud your creditors, let's say there were 10 members that get together and they form an LLC, and they make money in big spurts. And so what they decide is, well, before we retire, we're going to have this one big bang. We're going to make $100,000, and each of us are going to take our $10,000, and we're just going to close down the limited liability company. And then when our creditors come after us, we won't be here anymore. We're going to get rid of the profits so fast. Actually, what we'll do one better. We won't divide the profits. We'll pay salaries. So if the salaries are paid and there's no money left in the coffers, then remember that there's no personal liability exposure. That creditor cannot come after those members. So if the state feels like you have too high of salaries, they're going to get suspicious and they're going to think, okay, if they pay this high of salaries based on what they've been making in their last year or two, it looks like they're getting ready to stiff their creditors. So you cannot do that. They will unzip your pockets, as Professor Mestry likes to say. They will come right in, even though you're technically not supposed to have unlimited personal liability. In a case like that where they feel like you were defrauding the creditor, they absolutely will. Okay. And distributions, it's kind of the same thing. Distributions, you can make distributions of the profits periodically in an LLC. It does, as long as the LLC does not become insolvent by paying the distribution and thus cheating the creditors. So we're always taking care of that. I call him the innocent third party. Okay. The annual report. I mentioned this earlier. You have to file an annual report if you're an LLC. You must file one, but you can do it online, and you have to do it between June. You have to do it between June and May. It only costs $150 a year, and if you forget, it's not a big deal. You just have to go down and get reinstated and file the money. And I don't even think there is a penalty. There may be a minimal penalty, but they really want to encourage people to be LLCs. And so they're always giving you a break and letting you just come on back into the flock and get back on the team and file your annual report. All right, making changes. Now, making changes on anything when you're dealing with a state is always a tremendous headache. So it's important to know if you need to correct the articles of organization, you do that with something that's called the articles of correction. Okay, that's when you are fixing a mistake. There was something that wasn't accurate, and as you know, you have to be absolutely truthful and honest in all your documentation. So you would do an article of correction as quickly as you could. If, though, you were practicing whatever your business is, you're going along, and then something changes and you need to make a change, you're not correcting a mistake, but you're actually changing something, you do articles of amendment, and that will amend your articles of organization. That's for an actual change, though. So there is a difference if you're fixing a mistake and if you're making a change because something's different. All right, number 7, the LLC can sue or be sued in its own name. Number 8, it can hold title to real property in its own name. Number 9, members are agents, as we said, of the limited liability company, and the LLC can appoint agents. Number 10, voting. Unless the operating agreement says otherwise, all members get a vote in proportion to the contribution and the majority rules. So if there's anything that they're going to talk about, depending on whose corporation, which member has put in the most, however much money you have contributed or whatever assets, the value that you have given, and then the percentage, that's going to be the weight of your vote. All right. You must be, the only things that have to be unanimous are the following. If you are going to add a new member to the LLC, it has to be unanimous. If you're going to expel an old member, if you're kicking somebody out, it has to be unanimous. And if you're deciding to dissolve the LLC, that has to be unanimous as well. All right, speaking of dissolution, Florida Statute 608.441 talks about dissolution. And dissolution occurs when the fixed period of time has expired. If you've got a fixed period of duration in your articles, then once that time expires, then you are going to dissolve. Number 2, by unanimous written agreement of all members. If all the members are just kind of tired of the business and they had, we had a good run and we made a lot of money and we did a lot of good with our business and now we're just getting old and we just want to retire and kind of enjoy life, then we all decide, okay, let's dissolve the LLC and put the money in our pocket and go home. Number 3, by court order. That's never going to be a good thing. If the court is telling us, that means a judge has ruled and made a judgment that we are being dissolved. So that's not a good way for dissolution to occur. And administratively, if the state dissolves you, that's usually going to be a fee or something to get back in their good graces. All right. You must file, when you're going to dissolve, you must file the articles of dissolution with the state according to the Florida statute, and I've got it in here. That fee is $25. If the LLC changes its mind about dissolution and they decide after maybe a month or two, hey, I really miss everybody and I'm home with my dog and it's really boring around here. It's like reminds me of being in COVID again, COVID lockdown. Let's all get back together. And if they decide they want to do that and get the band together and head back into the office, they can file the articles of revocation. If they file the articles of revocation within 120 days, within filing of the articles of dissolution, then it's like the dissolution never happened. Okay. But if they don't, if they like that and they've retired and they're home with their dog and they love their dog and they decide they want to stay retired, they begin winding up all their affairs. They're not allowed to do any new business, and the only reason that the company, the LLC, stays open is just for the purpose of winding up the affairs. You have to notify all of the potential creditors and you have to pay them. First, you pay the creditors. Then you pay any members or former members that have made loans to the LLC and get them paid off and happy. And then all the members get paid in proportion to their respective capital contributions. After the liquidation is complete, the articles of dissolution must be filed with the Department of State, and the Secretary of State or the Department of State will issue a certificate of dissolution. Okay, I hope my papers are not rustling too noisily for you. So here's the advantages of having an LLC. Number 1, big neon sign flashing, giant letters, asset protection. Asset protection is the biggest advantage. Members are protected from personal liability for the debts of the LLC unless the members try to defraud someone, and then they can always come after you. Remember that case we talked about a minute ago. And personal creditors cannot take the LLC's interests if it is set up correctly, unless it is one member of the LLC, unless you only have the one member of an LLC. And then personal creditors could. But the big thing that I want you to remember is that the assets of the LLC are protected from the, like if one of the members go bankrupt, then they cannot come after any of the LLC's assets, the creditors of that one member. And likewise, if the LLC goes bankrupt, the creditors cannot come after any of the members personally. All right, so that's the big advantage. Some other advantages are that the fees are lower for LLCs than they are for corporations or limited partners. So it's a really economical way to go. Get a lot of bang for your buck. Continuity of existence, because it's going to last into perpetuity. If a member dies, the business just continues. It's not a big deal. Number 4, the ease of transferability. It's easy to transfer an interest. Number 5, taxes. There's no double taxation like in the corporate world, unless the LLC elects to be taxed as a corporation. No double taxation if the LLC elects to be taxed as a partnership, because it will all just go through the pass-through, and then each member will receive their money, and then they will be taxed individually. All right, number 6, the ability to raise capital. Anyone can invest. There's no minimum number of members that you have to have. And the book mentions that foreigners, like people from other countries, really like to invest in this type of business because this form of government this form of business entity is very popular abroad, especially in South America. That's where we got the idea here in the United States. Wyoming, it had something to do with they were selling beef to South America, and they were having a hard time doing the deal, and so Wyoming decided that, well, there's a lot of LLCs down there. Why don't we start one up here? And then if folks are familiar with that type of business entity, maybe they'll do more business with us. And sure enough, it worked. And then the whole rest of the country got on board. Okay, so the ability to raise capital, the flexibility in management. Everyone can participate. All of the members can participate in management. Number 8, there's not quite as much formality as in corporations. You don't have to have shareholders meetings, and you don't have to have a lot of that formality. And then number 9, they're internationally recognized. So there's a lot of advantages to being a limited liability company. And as for disadvantages, there's really just 2. The lack of uniformity in the United States, with all the different states having their own LLC laws, it kind of makes it a little bit difficult. When you cross a state line, you're trying to figure out if they have the same rules as you. And then the other disadvantage is right now there's so little case law that that gets kind of tricky too. So you're out there swimming around sort of without a rule book. But in Florida, let me just hit a couple more things and we're almost done. In Florida, a foreign LLC, and when I say a foreign LLC, I mean one from another country or another state, must obtain a certificate of authority from the Florida Department of State in order to transact business. And that is under Section 608.501 and 503.503. If not, then the LLC cannot sue in Florida, and it cannot receive penalties. Oh, it could receive a penalty of up to $1,000 a year. So what happens is $1,000 a year is not that much, and people they may just decide not to do it. But then if they need to sue someone, then they'll say, oh, actually, we're an LLC, let us file for it. And they'll say, really, how long have you been doing business in the state of Florida? And they'll say, oh, I don't know, maybe 9 or 10 years. And they go, well, that'll be $10,000. So they'll hit them up retroactively. All right. A couple of other considerations. There is something called a PLLC, and those are professional limited liability companies. They're exactly like the limited liability company, except that the members are all of one particular profession. They're all doctors, they're all lawyers, they're all accountants, they're all some particular profession, and they still remain personally liable for their own malpractice. So professionals generally cannot get away from malpractice, so they will have to carry their own malpractice insurance, and the name of those PLLCs has to have PLC or chartered in the name. And then the foreign limited liability company. In Florida, a foreign LLC must obtain a certificate of authority from the Florida Department of State in order to transact business. Okay, and if they don't, then they have to pay $1,000 a year. So that is all I have for now. The LLC is just a really exciting business entity. I know you're going to enjoy doing the homework. I want you to read all of the forms before picking out the form that applies to your particular scenario. So make sure that each time that you go and look, don't just find a form and go, oh, here's one that says LLC. Pick the one that works for that question. And other than that, I want you to have a great week. So I appreciate your time and attention, and I will see you next week. Okay? If there's any questions, of course, as always, just shoot me an email. Thanks. Good night.